Charlie Munger just had his annual Daily Journal meeting and he actually called out Alibaba. He said that Alibaba is one of his worst decisions that he's made, which is honestly shocking. And we're going to get into why, because he talks about it. And I'm just kind of shocked that he said this, because in the same breath, he said that it was pretty much a cinch, an easy play. It was almost a guarantee to make money on it, especially how dominant Alibaba business is, which is why I think it's a great investment. So we're going to listen to the video on why he thinks Alibaba was a bad investment.
But I regard Alibaba as one of the worst mistakes I ever made. In thinking about Alibaba, I got charmed with the idea of their position on the Chinese internet. I didn't stop to realize they're still a goddamn retailer. It's going to be a competitive business, the internet. It's not going to be a cakewalk for everybody.
So before the conspiracies come out saying that Charlie said this because of the CCP and how they're going to kill Alibaba, or Jack Ma doing whatever he did before, that is not the reason why he thinks Alibaba is a bad business. He just came out and said it himself. He said it's a bad business because it's a retail business, and he got charged because he thought it was a dominant internet business, but it really is disguised as a retail business. And basically, he's had bad luck with retail businesses, or Berkshire has really bad luck with retail businesses, and Mortgage Bride talks about this a lot. Even if you look at Dexter's Shoes, which was a bad business, it didn't succeed for them. And there's a lot of other examples of bad businesses in the retail space. They pretty much avoid the retail space now. But what Munger is basically saying is that he forgot it was a retail business because he understands how dominant Alibaba is in the market right now and how much competition is coming for Alibaba. You can see that with competitors like JD.com coming into the market and kind of taking space in that retail market. But in my opinion, this is not a good reason, because Charlie Munger himself in this interview praises Costco. He goes above and beyond for Costco. He says Costco is one of the best businesses ever. He loves the management of Costco and he loves the company. So is Costco not retail? Some people say it's wholesale, but in my opinion, Baba actually has better margins than Costco, even though Costco maintains its margins low so it can sell at a better price. But when you look at Baba's businesses, it doesn't even actually have to hold the retail space in half of its business. So that's a better business model to me, where you can just charge management fees. You can just tell companies to come on my site and you can charge management fees. So in overall sense, I think that's a better business. Even though Alibaba's margins has been going down like crazy because it's going into other spheres, it's doing a lot of other stuff, it hasn't been charging as much management fees on these different companies. I still think overall, the retail space with Baba is a better retail space than Costco. Maybe not by the brand, maybe Costco's brands may be better than Alibaba, but still, I still think Baba has a better overall business, especially when you think about Ant Financial and how Ant Financial holds half of like the digital spending online. So when you think about that, plus the cloud growth, that's so underrated. And we know that Charlie Munger praises Amazon. So if you can praise Amazon and hold Alibaba to contempt because of the retail space, that's kind of confusing. So he thinks the competition is just so great for Alibaba that it's just a really bad investment. You can't really go off what he's saying too much because he still holds Alibaba. And if he thought Alibaba was a real true mistake, he would sell it off, because Charlie Munger doesn't hold companies just to get back at the original price that I bought it at. He would sell it right away because he knows it's a mistake and that it's not going to recover. So if he truly thought it was a mistake, he would have sold. So you can't look at what he says. Look at his actions. Look at what he's doing. He still has a sizable position in Alibaba for a reason. He probably thinks it's going to be harder slugging from here. The competition is going to come in. Maybe Baba doesn't earn as much revenue or free cash flow. He does say in this interview as well is that he thought the returns were going to be better for Alibaba going forward. So he's probably seeing the returns not as big, maybe only 10%, maybe he was thinking 20%. That's another thing that you got to think about when he says that Alibaba is one of the worst investments he's ever made, which I'm still kind of shocked that he said that. So guys, what do you think about this video? Do you agree with Charlie? Do you agree with my thinking about this Baba position and how he's thinking about Baba? Guys, like this video, subscribe to my channel. I'm always providing you guys with so much new content. Like and subscribe. Peace.